afternoon, Outliers. How y'all doing? Happy Wednesday. I'll tell you what, a lot of people are not having a very happy Wednesday today, with the market taking a nosedive, which we'll cover more of that later on. But like, I mean, not everybody watches this channel, right? They should, but not everybody does. But we've been calling this pullback, right? This pullback for a hot minute, right? Outlier had that sell signal back on November 21st, which was here. It's at the same level it was November 21st, right? So even though it did go up, it's literally no different than the day we got that sell signal. But a lot more risk has been put on, right? This was not the great thing about what we do. And I would really encourage you to share this with more and more people. The great thing about what we do, by being market aware, by having the data, by having these insights, so we're out of the way when things like this happen, right? This wasn't a surprise. That's the best part about this. This wasn't a surprise. I feel like it was overdue, but it wasn't a surprise. And just keep in mind, right? People are losing their face right now on a 1.6, 1.7% pullback because they hadn't experienced anything like this in ages, right? In ages. Then you look at the Dow. I was on CNBC just a minute ago, just making sure I was up to date on the news. This is the worst losing streak on the Dow since 1974. As my children would say, back in the 1900s. Since 1974, the Dow has never had a losing streak like this, right? Also, that's what a trend looks like. But yeah, like, I know I'm not stressing. Are you stressing out there? You don't have to be. Peter, the big correction has finally begun. Absolutely. Mikey Mike's here. Jean-Louis here. Michael Wales is here. Bail out. Eject, eject. Hello, Yorn. Nice Batman sweater. Thank you very much. I got it at Six Flags last year with the intention of wearing it during the Christmas season, and I really never got to. And my family and I, we picked up a couple new ugly Christmas sweaters, and I was going through my closet, and I'm like, wait a minute, that's a pretty ugly sweater. I should wear that. Donna, good afternoon to you. So yeah, the market is tanking at the moment, but not scared. Not even a little bit. But I will tell you, Friday is my last day of the year. I know I won't be trading, but that's okay. My results are going to come out, and we'll do like a really solid recap at the beginning of the year. My results came out around 11% for the year, which is fine. They got as high as 30% at one point before that sell-off, and that sell-off was strong, and it hit me on multiple trades all at once. So disappointed I couldn't hit that number, but at the same time, I'll take 11%. It'll do. I had a conversation with Mark and Mahesh earlier today, some big product updates. The Mikey Mike, the trading platform announcement, the broker integration announcement is not going to come by the end of the year. I'm very frustrated by that, but it's just not going to happen. So I'm not going to make a big thing about it, but starting on January 6th, when we come back, I will have a new broker platform. But I can't tell you the deal until the deal is public. But I'll have a new platform then, so it'll be pretty obvious. What else? Tomorrow's live stream will be at 1 p.m. Central Time, so it'll be a little bit earlier than normal. My son is having his Christmas party at school, and Dad's coming along, so very blessed that I can go and do that. What else? Strategy library is going to be really cool. So we are going to be creating a strategy library inside of Outlier. What I'm really excited about is one of the strategies that's going to be up in the library first is mine, the golden ticket trading strategy. So I'm very stoked about that. And it's going to be as easy as an email each day with, hey, these are the ones that are set up for you. So then you don't have to comb through all the data. And I was like, yes, let's go. How cool is that? So Mahesh is working really, really hard on this. And then you can go in and add your own strategy to the library, right? So that'll be really cool. So let's say you've got something that's working really well. Like I know Dave's been doing some great moves lately. Dave could go in, code in his strategy basically, and then get an email sent to him. And then you could actually follow along on Dave's email. So, or on Dave's notifications when they cross. So it's going to be really cool. I'm excited about it, which is why for 2025, and we made a decision earlier today, I'm not going to join the US Investing Championship. I really wanted to. Like, I'm telling you, I was losing sleep over this decision. But even Mark was like, I told him, I was like, look, we made a big change mid-year by figuring out the master key. Then we made a big change in November once we figured out, skipping the trades that already had the 5% move. I said, I don't want to be doing that in the middle of the US Investing Championship. I want it to be the best I possibly can. And I said, I think we still have more to figure out with the data. And Mark totally agreed. He's like, Chris, this is a young platform. I think we still have not uncovered everything in the data yet. So I am planning on doing that for 2026 because I'm really stoked. Like, this is going to be super sick. So anyway, thank you all so much for coming. Thank you all so much for your support through the year. This has been awesome to hang with you and grow your accounts with you. And of course, teach a couple lessons along the way. And it's actually not Ninja Trader. It's actually not. But in the meantime, let's go over here. Welcome to the OVTLYR Trading Room. This is smart trading made simple. This is where we save time, make money, and start winning with less risk together as a team. And for those of you who don't know me, my name is Chris Friul. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009. And before we start trading, let's get into the lesson of the day. All right, so this video says the stock market is getting chaotic. Howard Marks explains. I actually don't know who Howard Marks is. If you know who Howard Marks is, type it in the chat. But yeah, the stock market is getting very chaotic on a day like today. It's plainly obvious. So let's see what this video says.
Clear. I've made my whole career buying assets that other people consider uninvestable. And when you do that, you have a chance of getting a bargain.
Howard Marks is one of the greatest investors of our time. With a net worth of $2.2 billion built through his legendary firm, Oaktree Capital Management, he is a master of value investing. And recently, he gave us a rare glimpse into his thoughts on the US economy, Trump's impact on the stock market, investing in China, and a lot more. So in this video, let's check in on Howard Marks' sea change, the great turning point for the US economy he's spoken about so much, and how we should thus be investing in 2025 and beyond.
The world is chaotic. The future is never clear. Some people spend their time trying to figure out the future and pricing it. I say it's unclear, and we abstract from that.
To understand Howard's insights on the economy and future.
Yeah, right. The world is unclear. I agree with that. And that's why you have to trade what's in front of you, right? Yesterday, we talked about a video where this person had a bullish thesis on AMD stock because he liked the CEO. Even though it's hitting new 52-week lows, he's bullish on the stock because he likes the CEO. And if that is your basis of an investment thesis, right? You're not looking at what is actually happening to the stock. You're not looking at what is actually happening in the market, because that stock is in a clear downtrend, right? In AMD. And to do that, you're blinding yourself from the obvious. So I think and I haven't watched this yet, I think what Howard Marks is about to say is, you have to take a step back and look objectively at what's going on in the market and say, things are, behaving one way or another. By the way, dude is sitting straight up in the dark. Like, he's wearing a black shirt with a black background. It looks like it's literally midnight 30, and he just like clicked a light on in an interrogation room. I just think that's funny.
Future investing outlook, it's important to understand how he thinks as an investor. Unlike most fund managers that try to make money by knowing more about the economy than the other guy, Howard is the complete opposite, rarely giving economic news any attention at all. This is called a bottom-up investing approach, focusing on individual companies and focusing on what's knowable rather than trying to predict macro events.
So we just try to look at individual companies and figure out which ones will grow, which one will repay their loans, and deal on that basis. We call that bottom-up, not top-down. We're not market timers. We're not macro forecasters. You could have said, if you had a great foresight, you could have said in 2019, I think there's going to be a pandemic. I'm going to get out. In 2021, you could have said, I think that Russia's going to invade Ukraine. I'm going to get out. In 22, you could have said, I think Hamas will attack Israel. I'm going to get out. You would have been right about the events, but it would have cost you a lot of money.
And that's always the problem with basing your investment.
Cost you a lot of money because you got the timing wrong, right? And I absolutely am a market timer, and I think you should be too. But being market aware is different than predicting where things are, right? Predicting a war, for example, that could be very costly if that doesn't work out, right? If you're completely wrong, or it starts a year later than you think, right? So I agree with him saying, be aware of what's going on rather than trying to predict things.
Investment decisions off macroeconomic factors. It's impossible to know the market's reaction. For example, Howard talks about 3 really big negative news stories in markets over the past 5 years: COVID, Russia's invasion of Ukraine, and Hamas attacking Israel, which fired up all this conflict in the Middle East. Now, here is the timeline of those events plotted on the S&P 500 price chart. As Howard says, if you were making investment decisions based on any of those 3 major global events, you would have lost out on some big returns. So instead of guessing the future, Howard's advice is simple.
Oh, hang on. Let's not backward look at things, right? Yes, agreed. The market is higher than it was in 2020 or 2022 or earlier this year. Agreed. But there's nothing to tell you at that moment price will be higher. So if he's going down the rabbit hole of always be invested because stocks are going to go up, I'm not going to be happy about this video. And I'm nervous that that's where he's going here. But hear me out. The market does not always do this, okay? This is sideways for 2 years, right? This is sideways for 2 years. If you zoom out, yes, there is growth over that time, but you also would have lost 2 years of nothing happening. Okay, let's see where this goes.
Global events, you would have lost out on some big returns. So instead of guessing the future, Howard's advice is simple. Analyze what you can control, like the fundamentals of individual companies. But okay, that then brings us to the fundamentals.
Okay, never mind. This is not what I wanted to hear. Be sure you analyze the fundamentals of every company you look at, because that is absolutely a direct 100% correlation to the price of the stock. So heavy sarcasm intended.
Tools like valuation. Sure, we might not be making a call on the macro, but it's well understood that across the board.
Hey, Mohammed, how you been, my friend? Miraculous. It's been a while. Hindsight is always 20/20.
Stock prices are really, really high. The CAPE ratio, which is like a big conservative PE ratio for the S&P 500, currently sits at 38-39. So how does Howard think about this overvaluation in the market? And how does this problem, which is seen even in bottom-up analysis, influence his investing?
You talk about how it is about intrinsic value. Everything else is baloney. But how do you get intrinsic value in a market that's overpriced? I mean, valuations are skyrocketing, especially.
Overpriced is relative, right? I am never one to say something is over or underpriced. Why? Why would I think I know more than the market to say something is overpriced? And here's my example, right? At any day, any single day on this chart, somebody bought the stock and somebody sold the stock on any single day. You know what that means? That it wasn't overpriced or underpriced. That was the right price for them to make that decision. And it may have been buying and it may have been selling. But to say something's overpriced or underpriced, it's relative, right? That is not a that is a subjective measurement rather than objective measurement. That is not a finite term when something is overpriced or underpriced. So I don't like that. But he didn't say it, she did.
On the S&P.
Well, you say it's overpriced. I would say it's high priced. Overpriced is.
Well, look at that. Look at Chris agreeing with this guy, right? Yeah, it's high priced, but that doesn't mean it's overpriced. How about that? That got like a little good job, me.
It's a judgment call. You think about what you think something is worth. You compare how it's selling relative to that. And then, in my opinion, that should determine whether or not you're aggressive or defensive. So I think we would agree that U.S. stock valuations, for example, are on the high side relative to history. That would tell me to be a little less aggressive than usual, a little more defensive, but not necessarily to get out.
So how
do I agree with that? Well done.
Agrees. Most stocks are expensive out there, but that doesn't mean you should throw in the towel, log into your stockbroker, and just sell your portfolio. In Howard's view, it simply means you should adjust your portfolio and your philosophy to being a little bit more defensive, something that I've been doing recently with my own portfolio on Stake. Also, I do just want to give you guys a quick update on my partnership with Stake, because
I'm skipping this ad, so you know.
For funding a new platform in Australia, new money when you sign. It means checking in with your portfolio to ensure you're not really overexposed to an overvalued stock or an overvalued sector. So making sure you've got some level of diversification and protection against, say, a big correction in US tech. And then the other defensive strategy that Howard goes on to talk about is to have a little bit of a cash buffer to prepare yourself for any eventuality. It's what he's doing, it's what Buffett's doing, it's what I'm doing. Because here's the thing about stock markets. Yes, we know that the market can stay irrational for an extremely long time.
I've said this many times lately. The market can stay irrational longer than you can stay solvent, right? Betting against the trend is the fastest way to the poorhouse. Trust me, I've done it. I have lost so much money betting against trends. And then I was like, hey, wait a minute. Rather than betting against the trends, I wonder what would happen if I bet with the trends. And lo and behold, I made money. Who would have thought?
But the way markets work is they go through cycles of excitement and over-optimism, and then they swing back down through fear and pessimism. But given time, they'll always at some point revert to where they ought to be.
Roll that statement back, my friend. Always where they ought to be is absolutely somebody trying to justify bad trades, right? Because if you bought it up here and it went down, you're saying, well, it will always correct and go back to where it ought to be. No, sir. You can't make broad statements like that, because in fact, let's go to some. Let's look at, what's that bike company? I have one upstairs. What's this stupid bike called that like my wife has ride twice? God, what is that called? Peloton. PTON. That stupid thing. Are you telling me we're gonna have to go to weekly bars on this one? So you're telling me that it should eventually correct all the way back up, right? Which is funny story. It's down 10% today. So you're telling me that markets always go through this, right? Perfect. Well, if markets always go through this, then just buy any old stock and just hold it until it comes up to that point, right? Let's look at something like AMC. Oh yeah, markets always go through this. Yeah. Let's look at GameStop. Cool. Yeah, markets definitely always go through this. Let's look at a big name. Let's look at Tesla. Right? So this one looks crazy, right? But does this fit this perspective here? I would say not. Maybe. But if you look at this perspective here, it comes all the way back down to zero in this case. Let's look at Meta. Maybe. I don't know. Just that sort of definitive statement, in my opinion, is there's always people justifying trades, right? And I think that is one right there. So let's continue.
If they're running hot, eventually the earnings lift to justify the price, or the market falls to correct. And on the other end of the slope,
the earnings can do whatever the earnings are going to do. The earnings do not ever have to lift to justify the price. Whoa. Okay, this guy clearly does fundamentals, right? Fundamentals are absolutely 100%